Welcome back. Let's look at Hershey. Is it a buy or is it a sell? First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. You can find Hershey under a theme that is right here. So these companies, they are highly rated among women. So 47-ish% are from the low, minus 27% pullback so far for the theme. Here is Hershey, they make candy, 41% from the low and minus 2.49 from the highs. Okay, so we start now by looking quickly at the website and then we will take on the technicals. So here is the company's website, Hershey. They don't. Yeah, here you can see Reese's. I've tried Reese's myself. Not a huge fan, but they certainly are very popular in America. So here you can see all their brands. Yeah, a bunch of different types of candy. And then you also have this skinny popcorn. Certainly sounds like they are trying to get it to migrate a bit to a more healthy direction. Okay, yeah. So let's just look at the charts. These are weekly data points. And as you can see, this stock has been public for a very long time. So we can go all the way back here to 1980. So 23,700% from that IPO, definitively been a big mover. What is interesting with this stock is that it does certainly move in some pretty major cycles. The cycles have differed a bit over time, but you can see that it definitively moves up big and also down big for being a large cap stock. As an example here, this is in 20. So let's draw that in. So this is in 2017. Around late of May, and all of a sudden it had a bear market. It was down here minus 24% from the highs, and this was during an overall bull market. Also back here you can see in 2015 it suddenly had a bit of a bear market. So that's an interesting feature of this stock. It can be beneficial to bulls and also to bears. We have definitively seen a very substantial bull move at the moment. Let's quickly look here at the daily data points as well. Recently pulled back a bit here to the 20-day moving average. But yeah, let's just look at these other indicators because that is when things get a bit more interesting. So looking at the MACD, the current reading we have here, as you can see, is extremely rare. It is almost unprecedented for us to have this strong of a rally. Usually this one likes to pull back. So in terms of letting the trend be your friend, the current move is completely different from the primary behavior of this stock. When we look here at the RSI, also at a very, very high level. So if you look really way back in time, you can see that for the vast majority of the history of this stock, it has a much lower RSI. Looking at the distance from the purple 20, 50, 100, and 200 week moving averages, we are at extremely high levels. We have been higher before, so we have to look a bit at what happened previous times where we were overbought on all these indicators. In terms of the MACD, we simply don't have these readings before 2019 here. So yeah, really unprecedented readings. But let's go a bit back here. You can see that back here, then we were more overbought on RSI and the PPOs, and then we did see a very substantial pullback. So that is definitively relevant. The previous time where we were like high on all the indicators, that was back here, where we have high RSI and also very high on the PPOs. Initially we go a bit higher and then we crash, then we try again, and then we really have a full bore bear market. So that is pretty relevant. Looking at the daily data points, this right here is the previous time where we had very high RSI and also high readings across the PPOs. initially you got a bit of a pullback, then we go higher, and then we see a very much deeper pullback. So let's measure how significant that pullback was. It was, minus approaching 8%, and that is pretty substantial for a large cap stock like Hershey. Okay, in terms of the line in the sand here, the main event, I would say that we are definitively overbought on the RSI and the PPOs, like that. So in terms of the technicals, especially on when it comes to MACD, we have this extreme reading. Like, it's very rare for us to have the situation we currently have. So yes, we are very overbought on RSI and PPOs, but when you also look at the momentum, it simply is an anomaly. So I do think that the risk reward here for the bulls is bad, but the risk reward for bears is better. So if I were to give it the technicals a rating, I would give it minus 6. Next, we will look at seasonality. To the right here, we have the average over the last 5, 7, and 10 years. Looking at that seasonality, there is usually some weakness, mediocre seasonality here towards April, where you see that there usually is formed a bit of a low, and then there is some stronger seasonality. Looking at the last 5 years here to the left, you see that February usually has a minus 1.7% pullback. March is strong, but April is very 50-50 over the last 10 years. Then you do see that, let's just draw that in. So it is pretty clear to me that you have this weakening seasonality. So that is definitively relevant for a more bearish thesis. Looking at the last 20 years, then February, it is the strongest month. That also means, though, that February could also be a month where that is peak bullish, where it's pretty good risk reward to put on some bearish trade. So in terms of the seasonality here, it's not like extremely bearish, but I do think that it's more bearish than bullish. So I will give the seasonality here a minus 3. Of a max, minus 9, and the max bullish would be minus 9, of course, plus 9. Next, we will look at the fundamentals. Here is Sachs. They have a number 2 buy, C value, B growth, B momentum. Industry rank is in the top 9%, food confectionery. Market cap, $42 billion US, 1.8% dividend yield. So that's pretty decent. Well, at least it's a dividend that is noticeable. In terms of the insiders, that's where it gets a bit more interesting, because no one knows the company better than the insiders. So you have a buy, but then you have sell, 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 buy, sell, 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 sell. So the recent moves here from the insiders have been more selling than buying. Nobody knows the insider information more than, guess what, the insiders. So they look at the chart and they are like, okay, I think I'm going to actually cash in some profits here. So mixed message here from Sachs, but the insiders definitively are they feel different. Looking here at the consensus estimates, then we do see that 20 analysts are covering the stock. The average price target is 1.8% above the current stock price. Highest is 12% above, the lowest is 30% below. So they do see a 1.8% upside, but that also means that they basically think that the stock is fairly valued, at least very close to being fairly valued. So in terms of the fundamentals, Sachs, in terms of the style scores, they definitively feel still some love for the stock. But the insiders are selling more than they are buying, and the price targets are also very mediocre. So the people who look at analyst price targets and they see what's happening with Hershey, they are not going to be really enticed to enter to maybe get that 1.8% gain. Yeah, so I would give this one to the bears. This is not like roaringly to the bears, but let me just give it, yeah, I will give it a -4, like that. Next, we will look at relative performance. Here you can see the correlation between Hershey and a bunch of stuff. First off, the S&P 500, 86% positive, then 81% with the consumer discretionary ETF, XLI, then 87% with the PBJ, which is the food and beverage ETF, and then we have 81% with sugar futures. Daily data points, short-term correlations. Then we have 27% with the SPY, let's say 10% with consumer discretionaries, 80% with food and beverage ETF, and -37% with sugar futures. So yeah, certainly seems like the strongest correlation we have here, short and long term, is with the PBJ. So what happens with the PBJ is very likely going to have an effect on Hershey. Okay, so here is the PBJ ETF. Yeah, we've seen a very, very, very strong breakout for sure. Major move here. Looking at the RSI and the PPOs, we have high readings for sure. Looking here at the daily data points. So this is really interesting. I look here at accumulation distribution. So this is a volume indicator that shows us whether there's a inflow or outflow of money. And look at what's happening here. I mean, did someone just completely dump their shares here of PBJ? So that is very bearish divergence. Wow, that's a dump. Look at that dump. Wow. Okay. So that was interesting. Now we are comparing Hershey against PBJ, the food and beverage ETF, relative, performance. It seems like we have some kind of time cycles here, not clean, but not dirty either. The time cycle suggests weakness here heading towards, April. We haven't seen that yet. So this one, it's a bit messy because on the one hand, we do actually have a breakout here above these prior resistance levels. So let's just draw that in like that. So here you can see a breakout above this level, this and this. And that is, for all intents and purposes, it is bullish, which means that Hershey might outperform the food and beverage ETF. To be perfectly clear, you can have a situation where both go down. It is just that Hershey might go down a bit less than the food and beverage ETF. So a bit of a mixed message here. The time cycle is a bit more bearish. Well, clearly bearish actually. While the breakout here, it is interesting. So the prior resistance levels are likely now support. Okay, then we compare let's actually quickly just look at the seasonality as well. Here with the daily data points, like that. So the seasonality indicators here on the bottom shows that Hershey actually has a tendency to underperform a PBJ here heading towards, deep into March. So that is actually interesting. So that sort of pushes the narrative a bit in the direction in favor of the food and beverage ETF. Okay, then we compare PBJ against the S&P 500. So in this case, you see that PBJ, food and beverage, has underperformed the S&P for quite some time. We are essentially still in a downtrend. Because we made a new low back here. So let's actually just go here also to the daily data points to get a bit more detailed picture, like that. So for quite some time now, we have made lower highs and lower lows. So that is sort of like being the primary narrative here. But there's a little bit of a change in the air at the moment. You could argue that a potential floor here is being formed. At least you see that the low here is a bit higher than this one. So this is not like roaringly bullish by any stretch of the imagination, but we have gone from being like the PBJ massively underperforming the S&P 500 to at least it being more of an even battle. So let's just look here at the seasonality as well. Yeah, the seasonality here definitively favors the bears, because you see that the PBJ usually underperforms the S&P 500 here heading into late May. So in terms of relative performance, so what kind of rating should we give it? That's the thing. So obviously the numbers I give here, it is, it's a bit subjective, but it's just to sort of put a bit of a number on it. And this is something I would definitively recommend you do as well in terms of, investing, is to have a bit of a log of the different theses you have, and then to sort of do a bit of a review later on. And that is, you can see the reviews I do, 2 months after I publish videos by going here and getting VIP access on DiamondArm.com. Okay, so what rating should we give it? So this one, it's a bit messy, because on the one hand, you did see here that relative to the PBJ, you did have that conflict between the chart and also the seasonality. PBJ versus the SPY, we've gone from being quite bearish to now at least moving a bit more sideways. So I will give this a minus, I think I will give it a -3, like that. So the average score then would be a -4. So taking all the data together, I feel more bearish than bullish when it comes to Hershey going forward. Okay. So yeah, the line in the sand is that, we have overbought our SI, okay, not our EIS, but our SI like that, and PPOs. And looking at the technicals, seasonality, fundamentals, relative performance, they do essentially corroborate that thesis. Whatever you do, of course, you always want to use stops, and in terms of letting the trend be your friend, it makes a lot of sense, to look at, the longer term trend, because a lot of people, they misunderstand, that slogan and think that the trend is the last 2 candlesticks. That is not the trend. You gotta just sort of do a psychoanalysis of the stock like we did now. And then we did see that previously, where we had, as an example, these kinds of technicals, they usually were more favorable to bearish trades than bullish.